Okay, so this video is the 2023 cash budgeting question. So we'll just take a quick read of it here. So Lupin Ltd is preparing to set up a business on the 1st of the 1st, 2024. They plan to lodge 80,000 into the business bank account. Lupin Ltd has made the following forecast for the first 6 months of trading. So you can see all the sales and all of the purchases for January through to June, and then you've got the totals at the end there. So number 1 says the expected selling price is €50 per unit. Number 2 says the cash collection pattern from sales is expected to be as follows. Cash customers. 40% of sales revenue will be for immediate cash and a cash discount of 5% will be allowed. Credit customers. 60% of sales revenue will be from credit customers. These debtors will pay their bills 60% in the month after sale and the remainder in the second month after sale. Number 3, the cash payment pattern for purchases is expected to be credit suppliers. The purchases will be paid for 50% in the month after purchase when a 2% cash discount will be received. The remaining purchases will be paid for in the second month after purchase. Number 4, expenses of the business will be settled as follows. So expected costs. Wages, €84,500 per month, payable as incurred. Variable overheads, €4 per unit, payable as incurred. Fixed overheads, including depreciation, 82,000 per month, payable as incurred. Capital costs. Equipment will be purchased on the 1st of the 1st, 2024, costing €36,000, which will have a useful economic life of 5 years and have a scrap value of 5% of the original cost. To finance this purchase, a loan of €24,000 will be secured on the 1st of the 1st, 2024. Interest will be charged at 8% per annum. The interest for each month is to be paid on the last day of the month based on the amount of the loan outstanding at that date. The capital sum is to be repaid in 32 monthly instalments commencing on the 1st of the 2nd, 2024. Okay, so what you're asked to do is part A, prepare a cash budget for Lupin Ltd for each of the 6 months, January to June 2024. So a cash budget is basically just cash in and cash out. So there are no non-cash items that are going to go in this. Now in the exam, you will be given paper in which to do this, right? But here's your cash in here. Here's information on cash out. So you will be given, as I said, lined paper, okay, in the exam. So you don't have to line anything out at all, okay? But this is what your cash budget is going to look like. So your cash budget, all right, you're going to have your cash in at the top. You're going to have cash out then underneath, and you're going to have net cash, bank loan, opening balance, closing balance. So all of these things here you will take from just reading the question, okay? But you will notice that from exam to exam, there's very little change from one year to the next that it comes up, okay? So first we'll do the receipts, as we see here, which is all about the cash in. So you can see that we've got cash sales receipts, and then we've got credit sales after 1 month and credit sales after 2 months. So we read that in the question. So that's the time that we give to debtors to send us the money. Then the payments, you know, we've got our payments to our creditors. So our creditors are giving us 1 month to pay up and then 2 months to pay up. Okay, then we've got wages, variable overheads, fixed overheads, equipment, loan repayment, interest, and then we tot up our total payments. Our total receipts minus our total payments is equal to our net cash. Okay, so that's our total payments minus our total receipts. Then we'll put in a bank loan here, and we'll take a look at the question, see if there was an opening balance. So I read there that there was 80,000 opening balance at the start, right? And that's going to give us our closing balance. So look, we'll get started preparing the cash in for the question. So 2023, this is the information that we're looking at. We're going to take a particular look here at our sales, okay? And I'm going to read out the information about our sales here as well. So we've got cash customers and we've got credit customers. So these are our debtors here, okay? So cash customers, It says 40% of sales revenue will be for immediate cash, and a cash discount of 5% will be allowed. Okay, so for example, here in January, you've got the 468,000 in January. We would multiply that by 40% and then multiply it by 95% because we're actually going to receive 95%. Okay, so the other 5% is a discount that we are allowing, so we won't ever receive that. The next one then, credit customers, 60% of sales revenue will be from credit customers. So we'll have the 468,000 multiplied by 60%. Now it says these debtors will pay their bills 60% in the month after sale and the remainder in the second month after sale. So the first month after sale will be 468,000 multiplied by 60%, multiplied by 60%. And the second month after sale will be your 468,000 by 60% and by 40%. Okay, and then you'll do that for each and every month. Okay, so you'll be slotting the figures into your calculator. What you can do is in your scientific calculator, just change the 468 to whatever the figure for sales is for the next month. Okay, but you just need to practice. So just again, our 468, okay, if we looked at the cash sales, so 468,000 multiplied by 40% multiplied by 95% is equal to 177,840. Okay, then your month after sale, 468,000 multiplied by 60% multiplied by 60% is 168,480. And then the next one, 468,000 multiplied by 60% multiplied by 40% is 112,320. So you can see those figures here. Okay, now it is very easy for students to make mistakes in this question because you're just constantly on your calculator. So what I would suggest that you do is you double check and you triple check before moving on, because a lot of H1 students can easily make mistakes here, or they can, mix figures up, or, they might write down 112,320 as 112,230 or something like that. So just make sure that you are double checking all of your workings. So that was for January. Okay, so what you're going to do then is for February then, you'll just change the 468,000 to your 544,500, but you'll use all the same calculations there to come up with your February figures of 206,910, 196,020 and 130,680. So you just are spending a hell of a lot of time on your calculator. You can see here I've color coded this. Sometimes it's not a bad idea to write January in black pen and then maybe February in blue pen or something, just so that it can kind of stick out. All right, or if you have a highlighter, just highlight the different months, just so that it makes sense in your head. When you get all those calculations done, it's time to tot up your total receipts. Again, you're on your calculator an awful lot, so just double and triple check that. Make sure that you're right. Now, they've never given any marks for the total columns here, but we will need a lot of figures from the total column when we go to do part B of the question, which is a budgeted trading and profit and loss account. So it's not a bad idea to just tot them up here, but I've never seen any marks going for those yet. Okay, so we start in the purchases figures. So our purchases information here, and number 3 says the cash payment pattern for purchases is expected to be credit suppliers. The purchases will be paid for 50% in the month after purchase, when a 2% cash discount will be received. The remaining purchases will be paid for in the second month after purchases. Okay, right, so look, the purchases figure here, say for January, right? So for the January January purchases of 436, they're going to be paid in the month after, right? But you're going to pay 50% of them, but you're going to get a 2% cash discount. So you're going to multiply that by 98% because that's how much you're going to pay. And that will be 213,640. Okay, so you'll be paying for that in February. And then in March, you'll be going 436,000 just by 50%. And that would be 218,000. Okay, so your purchases, right? January's purchases, you're not going to pay for them until February and then March, okay? Then you will do the same thing for each month, all right? You'll take the 320 next and you'll get 156,800 in the following month and then 160 in the month after that. And you just go on and do all of the figures like that and then tot them up. And again, very important to make sure that you are double checking and triple checking that you've got the answers right. And say, for example, that you've got the correct amount of zeros and stuff, because that's a mistake that a lot of students make. Okay, next we're looking at all the expected costs. Okay, so first one there, wages, 54,500 per month, payable as incurred. So that's lovely and easy. Just 84,500 goes into each of the months: January, February, March, April, May, June, and then the total 507,000. Next, we have variable overheads, €4 per unit, payable as incurred. Okay, so what we have to do here, right, is we have to say the purchases, okay, the sales, 468, okay, 468. We need to find out how many units there were in January, and we will do that by looking at the expected selling price is 50 per unit, right? So if I divide that by €50 per unit and multiply it by 4, I will get 37,440, okay? So if I divide the sales by the selling price per unit, which is €50, that'll tell me how many units I have, and then I will multiply it by the €4 per unit. And so January, 37,440, okay? February then, you'll go 544,500 divided by 50 multiplied by 4. In March, you'll go 568 divided by 50 multiplied by 4. In April, you'll go 585 divided by 50 multiplied by 4. May, 574 divided by 50 multiplied by 4. And June, 661,000 divided by 50 multiplied by 4. And you should get these figures here. Again, double and triple check that you have the correct figures. Okay, next we have the fixed overheads. Okay, so we have here, it says fixed overheads including depreciation, €82,000 per month, payable as incurred. Now, it is important for you to know that depreciation is a non-cash item. So when we depreciate a fixed asset, we're not taking money out of our bank or transferring money and giving it to somebody else, right? Depreciation is a non-cash item. There is no involvement with cash here at all. We are doing a cash budget, so we need to take the depreciation out of that. Now, what are we depreciating, right? So we have to look for information about fixed assets. That comes in the capital costs information. It says here that equipment will be purchased on the 1st of the 1st, 2024, so January, 1st January, costing 36,000, which will have a useful economic life of 6 years, which is 60 months, and it will have a scrap value of 5% of the original cost. Okay, so a bit of work to do here. So if we imagine 36,000 equipment, right, is 100%, we can then find out, right, what 95% is, because it's only ever going to depreciate by 95% because you're always going to have a scrap value of 5% of the original cost. Okay, so what we need to do to get the 95%, 36,000 divided by 100 multiplied by 95. And that is a figure, 34,200 then is 95% of that. If we divide that then by 60 months, we will find out that our depreciation is €570 per month, right? That is the depreciation. So our fixed overheads, if they're 82,000 per month, right? From our 82, we just take our 570 and that will be what our fixed overheads are. So 51,430 is our fixed overheads without our depreciation. Okay, the next month then, we're just looking at the equipment. So we've read about that already. It was 36,000 bought on the 1st of January. So it just goes into January. Nothing in the rest of the months, and the total 36,000. The loan repayment then. So when we read the question first, we read about a loan repayment. So let's just take a read of this again. So it says, to finance this purchase, a loan of 24,000 will be secured, okay, on the 1st of the 1st, 2024. Interest will be charged at 8% per annum. The interest for each month is to be paid on the last day of the month based on the amount of the loan outstanding at that date. The capital sum is to be repaid in 32 monthly instalments commencing on the 1st of the 2nd, 2024. Okay, so from this we can tell that there are loan repayments and there are interest charges. Okay, so loan repayments and interest charges. So for the loan repayments, €24,000 was the loan, okay, and they're saying that it's going to be in 32 equal instalments. So if we divide that by 32 instalments, okay, each month, right, that would be 750 per month. So the loan repayment, 750 per month. Why is it starting only in February? Because it says the capital sum is to be repaid in 32 monthly instalments commencing on the 1st of the 2nd, 2024. So we don't start in January, we start in February. So that is the loan instalment. Next, the loan interest. So this is definitely something that students will struggle with. So just looking at it again, the loan is 24,000, okay, and it's an 8% loan, okay. If we were to multiply that by 1/12, that's 160 per month then for January. Now, it said it's going to be repaid on the last day of the month based on the amount of the loan outstanding at that date. So in January, you do have 24,000, right? In February, you've paid off 750, okay? So the 24,000 minus 750, so 23,250 multiplied by 8% multiplied by 1/12, that'll give you 155 per month, okay? And then March, you'll have 22,500 multiplied by 8% multiplied by 1/12, and that'll give you 150 per month. So each time it's just reducing by 750. So just keep taking 750 away from the principal amount, but always just keep multiplying by 8% and by 1/12. And each time you'll see when you're doing that, it's just going to reduce by €5 each month. So here we have 160, 155, 150, 145, 140, 135 and 885 altogether. So that is definitely where a lot of students can fall down. So just make sure when you are completing these cash budgets that you really focus on the loan interest parts and you take a lot of care whenever you're doing these. Okay, so when you have that done, you're just totting up all of the payments, okay? And again, just double check each thing as you're going along, right? And then when you're totting it up, double check the tot ups as well, because just spend an extra minute just double checking. Now, the net cash, okay, that we have here is basically the total receipts minus the total payments. So net cash is the receipts minus the payments, okay? So 177,840 minus 239,530 is minus 61,690. 375,390 minus 424,035 gives us minus 48,645. 523,000 minus 586,990 gives us minus 63,190. 557,100 minus 532,875 gives us 24,225. 572,400 minus 538,540 gives us 33,860. And then June, 605, 548,420 minus 548,845 gives us 56,575. And then the totals then, 2811,950 minus 2870,815 gives us minus 58,865. Now, we will remember in January we got the bank loan for the equipment. Then at the start of the year, we have to remember we had an opening balance, okay, at the start of the year. So it was in the second sentence in the question where it says, Lupin plans to lodge 80,000 into the business bank account. Okay, so they're preparing to set up business on the 1st of the 1st, so he's going to put 80,000 in. So minus 61 plus 24 plus 80 gives us a closing balance of 42,431. That 42,431 is the opening balance of the following month. And there we get minus 6,335. That minus 6,335 is the opening balance of the following month. The closing balance in March is the opening balance in April. The closing balance in April is the opening balance in May. The opening balance in June is the closing balance in May. And the 80,000 here in the total is the 80,000 that was at the start of the period. And then the closing balance, 45,135, is the closing balance at the end of the period as well. So that's the cash budget there for 6 months from January to June. My advice for you when you're doing this is to just be very, very, very careful that you are totting everything up correctly, that you're using your calculator correctly. We would always check figures twice. The things that students fall down on is obviously, your credit sales and purchases, not checking, not rechecking or writing the figures down wrong. The fixed overheads, you have to remember to take out depreciation, because depreciation is not a cash item. It's a non-cash item, and this is a cash budget. Okay. Also as well, students would fall down with the loan repayments and the interest. So it's very, very, very important that you do pay particular attention to them whenever you are completing this question. Okay, so that is part A of that question complete. Let's take a look and see what they're looking for us to do for part B. So part B says, prepare a budgeted trading and profit and loss account for Lupin Ltd for the 6 months ending 30th of the 6th, 2024. Okay, so it's important to note here, trading account, right? Trading profit and loss account, it is our sales less cost of sales, and then we're taking away all of our expenses, adding our incomes, and then finding out did we make a profit or loss. Now, in this, we are going to be putting in what the actual revenues and expenses were, okay? And it's regardless or not of whether they have been received or paid. So it's exactly what we're doing in question 1, or question 1 final accounts question as well. We've loads of sales, but we mightn't have received them all because we've got debtors in the balance sheet, okay? But we still made those sales, so we are including them in the budgeted trade and profit and loss, okay? Now, in the budgeted trade and profit and loss though, you have to make sure that you can put in, right, you have to remember that you can put in non-cash items as well, okay? So there's cash items and non-cash items that are going to go into the trade and profit and loss. So the non-cash items that we might see here, that we see in a lot of cash budgets, we've got depreciation, we've got discount allowed, and we've discount received. So those non-cash items do not go into the cash budget, but they definitely do go here. So this is just like our question 1, but it's budgeted, so it's future tense instead of past tense. So we take our sales from the question. We haven't received all the money for it yet, but that doesn't matter because we have to put it in here. Because we made the sales, we have to record them here. Less cost of sales. So there was no opening stock, no closing stock, just the purchases here, 209,100. Now, expenses. We have our wages from the cash budget. We have our variable overheads from the cash budget. We have our fixed overheads from the cash budget. So this was just from our totals here. Now, we're going to put in depreciation here. So we worked out that our depreciation was €570 per month for the equipment. And we're doing this budget trade and profit and loss for 6 months. So we're going to multiply that 570 by 6 months and we get 3420. discount allowed then. So we had sales here, 3419500, but if you remember, we were receiving 40% in the first month. So in the month that we sold it, we were receiving 40% in cash sales, but we were given a 5% discount. So when we multiply that out, we will work out that we give a discount of 68,390. So there are all the expenses there, okay? Now we look at the incomes. So the incomes then, we definitely did receive a discount. So we had purchases of 2091000. Now, look at how we're going to work this out now. So if we read back in the question again, it says the purchases will be paid for 50% in the month after purchase, when 2% cash discount will be received. So we cannot include June, okay? Because we would not receive that discount until July, okay? So we have to take out the 345,000, okay? So 2091000 minus 345 multiplied by 50% multiplied by 2%. Okay, because that's what it says in the question. So we're going to pay it 50% in the month after when we receive a 2% discount. So that is 17,460. All right, and then we add up all the interest from our cash budget, 885. That gives us a net profit of 4125. So that is our budget P&L account for the 6 months, January through to June. So remember all of the non-cash items. A lot of students will leave them out by mistake, so it's very, very, very important that you remember the non-cash items. Okay, part C then. Number 1. What factors should be taken into consideration by Lupin Ltd in arriving at the expected sales figures for the first 6 months of 2024? And 2. On the basis of the cash budget you've prepared in A above, what advice would you give to the management of Lupin Ltd? Okay, so what factors should be taken into consideration by Lupin Ltd in arriving at the expected sales figures for the first 6 months? So you'd have to look at market research of your customers, right? Or the opinion of sales managers, sales representatives. Like, how much do they think that you are going to sell, right? So the people that are working in this job all day, every day, and asking your customers through market research, that will give you a good indication of what you think will be sold. Trends or the state of economy, like, are we in a boom or are we in a bust? Are we going through a recession, right? So if there's a lot of money in circulation, we'll probably sell a lot of goods. If there's not a lot of money in circulation, likely that we won't be selling a lot of goods. What is the status of our competition? So who are our competitors? How good are they doing? How much competition do we have, etc. Luxuries versus necessities. So, like, is the good that you are selling something that people need? Okay, is it a basic human need, or is it like a luxury, like a Ferrari cars, right? So what, if people really need it, very likely you'll be selling high volumes. If they don't really need it, very unlikely that you will. Then you can have last year's sales from other stores or even your stores. And then the price to be charged, or the sales price, is another one as well. So, number 2, on the basis of the cash budget you've prepared in A above, what advice would you give to the management of Lupin? Now, it's very important here that you use figures from the question. So a lot of students will not use figures from the question, and then they'll fail to collect any marks. So it's very, very, very important. Okay, so down here, I've just identified the months where we're in serious trouble. We've got all of the minuses here, okay? So we've got serious cash shortages in February, and I've listed out the figures. So 6335, March 69525, April 45300, and May 11440. So look, this is not good at all, right? This has occurred even though the owners have invested €80,000 at the start of January. Okay, so that's very important. The business needs to increase cash receipts and decrease payments. So that is definitely a very logical thing to do. Okay, so how would we increase cash receipts? So maybe they could change the credit terms for debtors to encourage more prompt payment by offering a bigger discount than the 5% that we currently give them. So if you give them a higher discount, maybe they'll pay a little bit earlier. Okay. Now, how could they reduce the payments? Maybe they could change the credit terms, right, with the creditors. So maybe they could allow them 3 months to pay it back instead of only 2. They could examine the wage bill, the variable overheads. They could examine the fixed overheads as well. So all of these wages, variable and fixed, like can they all be reduced? We can definitely shop around for cheaper expenses. With regards to the 36,000 equipment, they should hire equipment instead of buying it to reduce cash expenditure and spread the payments over the life of the asset, which is 5 years instead of the 3-year repayment period for the loan. The company could also delay the start date of the repayment for the loan. So instead of paying the $750 in February, could they maybe push it back out to a loan or a date further out? Could they make the interest payments later as well? So that's something maybe they could negotiate with the bank. They could arrange a maximum bank overdraft, 69,525, which according to these forecasts could be repaid very quickly, as by the end of June, there is a forecast cash surplus in the business of 45,135. So look, it's very important here, if you're going for the H1, remember that you have to enter the figures. If you have completed this incorrect, you are not going to be penalised twice. If you use your own incorrect figures to explain stuff in this part 2, that is absolutely perfect. You are allowed to do that and you will get full marks based on your own incorrect figures, which is great news. So look, that is the 2023 cash budgeting question completed.